Most people think a stock is strong because it's going up. Some think it's safe because it's profitable. And almost nobody stops to ask, where is that profit actually coming from? Hut 8 just posted a 112% profit margin. On paper, it looks like a monster, but here's a problem, and it's buried deep in the financials. If you're just looking at headlines, you're already behind, because once you actually understand how this business makes money, you're either going to be stunned by the upside or shocked by what's really driving the numbers. Most people won't go that far. They'll chase the stock or they'll ignore it. But neither of those strategies will work here because this isn't just another Bitcoin miner. It's not just another AI pivot either. It's something else entirely. And the risk reward is unlike anything else in the market right now. So before you buy, before you sell, before you scroll past this stock, you need to see what's under the hood. And once you do, the entire narrative changes. Everyone's cheering the numbers. Revenue's up, earnings beat, stocks ripping. And if that's all you looked at, you'd think this company's killing it. But here's the problem. The revenue isn't real. Not all of it. Because Hut 8 rolled up American Bitcoin into its financials. So now every contract they sign with that entity gets erased. Hosting deals, power contracts, gone from the report. Why? Because accounting rules say it's internal. But investors don't care about accounting rules. They care about cash. And the cash is flowing. You just can't see it. That's not a strength. That's a risk. Because when revenue is hidden, you don't know what's actually driving the business. You're guessing. That's the danger. Not that the business is failing, but that it's playing a shell game. One shell holds real growth, the other holds nothing. And most people have no idea which one they're betting on. They'll value it wrong. They'll chase the wrong trend, and they'll get blindsided when the illusion breaks. This is how investors lose money on profitable companies. They trust the headline, they miss the distortion, and they get punished for believing in a number that never told the truth. That's why people watch my channel, to get the real breakdown, to understand the actual risks hiding in the numbers, and to avoid falling for the BS hype that gets investors wrecked. You see, Hut is quietly building a moat, and it's not mining. Most people still think Hut 8 is a Bitcoin miner. They're wrong. It's not just mining anymore, it's infrastructure, and that shift changes everything. Hut controls 3.1 gigawatts of power capacity under exclusivity agreements. That's not small, that's generational scale. These aren't leased sites. These are owned, operated, and locked down. In a world where power is the new oil, Hut just bought a refinery. Nearly 90% of their power capacity is now under long-term contracts. That means stability, pricing power, and leverage. The Vega facility, fully energized, purpose-built for high-performance compute, not retail GPU nonsense. Real AI capacity. This is the part most people miss. Everyone's chasing AI stocks, but AI doesn't run on headlines. It runs on power and data centers, and Hut owns both. That's not a crypto narrative. That's a physical moat in steel, concrete, and megawatts. And this is where the stock could explode. If Hut lands even one hyperscaler, just one, the business gets re-rated instantly. The infrastructure is built. The contracts are in place. The question now is simple. Can they sign the client that makes it all go parabolic? I know, everyone's hyped about AI, and to be fair, so is Hut 8. But here's the reality. Right now, AI is not driving the financials. It's a dream, not a revenue stream. GPU as a service brought in just $2.3 million this quarter. That's nothing. It's not even a rounding error. And for all the talk about the Vega facility, the site is energized, but they haven't signed a single hyperscaler. Not yet. Now, to be clear, that doesn't mean it's a failure. It means they built the machine before the money showed up. That's what this bet is. You're not buying current income, you're buying a plan. And that plan comes with risk. Capital expenditures are high. Timelines are tight. AI demand moves fast. If they miss the window, that infrastructure turns into deadweight fast. But if they land the right client, a multi-year AI deal, everything changes. Revenue spikes, margins expand, the story goes from maybe to monster. So ask yourself this, are you buying the potential or are you confident they can actually pull it off? The profits look huge, but the cash says otherwise. Hut 8 posted a net profit margin of 112.8%. That number is so big, it almost feels fake. And in a way, it is, because the profit didn't come from operations. It came from Bitcoin, specifically the rising value of the Bitcoin they already hold. Accounting marks it up. Income shoots up, but it's not cash. It's not from selling services. It's just paper gains. Now, look at free cash flow. negative 234%. That's not a typo. That's a bloodbath, and it tells the real story. The business is still burning cash at a massive rate. Even worse, their cash return on invested capital is negative 23.3%. So for every dollar they deploy, they're losing money, not making it. That's the difference between reported profit and financial truth. And this is where most investors get played. They see the net income, they see the chart, they think the engine's running hot, but the fuel tank's empty and the company's still coasting off asset gains. And if you don't know how to separate real profit from fake profit, this stock will trick you, and it'll do it with a smile. This stock has massive upside, but it also carries real danger. Let's break it down the right way: the bull case, the bear case, and the bottom line. The bull case: if Bitcoin holds above 100,000 and HUT signs even one AI hyperscaler, the upside is massive. The data centers are energized, the infrastructure is locked in, the leverage is already built. A single multi-year AI deal could reprice the business overnight. And if Bitcoin runs alongside it, this stock doesn't just go up, it explodes. And here's the bear case. Revenue is distorted. Cash flow is deeply negative. Profit is driven by unrealized Bitcoin gains. The AI side isn't generating real revenue yet. And because of how the consolidated structure works, key contracts don't show up on the books. That lack of transparency makes it harder to value the company and raises the risk of being completely wrong. If the deals don't land and Bitcoin retraces, this thing could get cut in half fast. The bottom line: HUT 8 is not a stock you build your portfolio around. It's a small bet, the kind of position you can afford to lose if it all goes south. There's real upside here, but it comes with real volatility. This isn't where you go all in, it's where you go in smart. Anyone can hype a stock, but you're here for the real breakdown, the risk, the reward, the traps buried in the numbers most people never bother to look at. That's what gives you an edge, and that's why we do this. So let's get this out of the way. I'm bullish on the business, but I'm not chasing the stock here. In the last 6 months, the stock has rocketed up 306%. That kind of move changes the risk profile. I'm not trying to buy into that momentum. I'm looking to build a position the right way, either on a pullback or through consolidation where the risk gets reset. This is not a core position. This is a high-risk, high-reward name that could explode higher or get chopped in half. So I'm treating it that way, with tight sizing and a clear plan. Right now, I'm going to sell cash-secured puts where the math is stacked in my favor. I'm getting paid to wait. And if the stock pulls back into my levels, I'll get assigned into a price I actually want to own. But here's the real question. Is the business getting stronger every quarter? Yes. Are the numbers trending up across customers, contracts, revenue, and infrastructure? Again, yes. Is the product becoming harder to compete with? Absolutely. And when those three things line up, I pay attention. So yes, my thesis is bullish. However, this stock could still crash and burn. The execution risk is real, but if they land an AI hyperscaler while Bitcoin holds above 100,000, this gets re-rated fast. That's not hope, that's leverage built into the structure. You don't buy stocks like this because they feel safe. You buy them because you have a system for risk, a strategy for sizing, and you know exactly what you're betting on. Otherwise, you're just gambling. Now let me ask you something. Who else is breaking down stocks like this, actually showing you where the risk is buried and how to trade around it with discipline? Most people either hype the story or avoid the risk. I don't do either. I show you what's real and how I'm executing around it. And it's not just me. Yes, my accounts are up over $2.3 million this year, but what matters more is this. Other investors are winning with the same system. Krista just nailed her first trade in TMC, 20% in a day. Randy hit 50% in 2 days on ticker EGAN. And Steven locked in $4,200 last week with 0 losses. This isn't hype. This is execution. Inside my Patreon, you get real-time trade alerts with full breakdowns, daily market analysis, no fluff, the exact momentum strategy I use to scale 7-figure positions, and access to an investing community that actually knows how to win. It's only $30 a month. People waste that on things that never pay them back. This does. So if you've been watching these videos nodding along, telling yourself I should probably join, then now's the time. Because the truth is simple. You can scroll or you can scale, but either way, don't say you weren't told.